Hey, what's going on? This is TerrenceRe back at you with another stock market update. We're going to be talking about risk and opportunity. That's a good topic for today. Right now, we got the S&P 500 futures up about 1%. Got the Nasdaq futures relatively flat. They had been down today. Dow futures up about 1.5%. Excuse me, about 1.25%. The Russell futures leading the way up. I expect that because they were leading the way down. Right now, I would say they are the most volatile, up almost 2% on the day. And we have the bonds down, the notes are down, and the 2 years down. Oil is down a percent. Oil has been tanking pretty much, and gold futures are relatively flat. They're still in the green. And so right now, what we're looking at is, I think that the market is going to pretty much stay like this until we get that Fed rate decision, on the 22nd from the Fed chair. Um, but there's still opportunities in the market for some intraday trades. Like we've had some swings back and forth, but I would be cautious. Um, Obviously, in my opinion, I'm just gonna. I do have a couple positions on. I have J.P. Morgan up right now because I have a bearish position on. We could take a look at that position. Let's go to the trade tab. Basically, I just have a condor on. You can see right here. I actually want the market to come right here and get between my short strikes. Now it doesn't have to for me to make money. Right now, I think I'm actually in profit right now. I actually let's just go look and see. You can see I'm up like maybe $6 altogether. And on the IWM trade, up about $33. So I'll continue to hold those. Actually, the market is, as long as the market stays in my direction, I'm good. And even though I bought these spreads, they're positive theta because of the options that I sold. So I'm not losing money on time decay. So that's a great thing. But if you look up here at the IV rank, it's 77 on JP Morgan. And on all the banks, for the most part, they have high IV, right? So that's letting you know that risk is being, volatility, which equates to risk, is being priced in to the movement of these stocks. But where there's risk, there's also opportunity. There's your greatest reward too. We should get wild swings either way after Wednesday. We may not get anything before then. May just sit where they are. Currently looking at them. I'll show you what I expect or what I think will happen. Right now, we're sitting right here on a Fibonacci extension or expansion line right here, and that is acting as support right now. I would like to see it take this low out and come down here and hit this next level. I may take that trade off if it comes down here and hits it within this week. So, and take that profit of wherever it is at that moment. Excuse me. But now we could get some news and it could go the other way. I'm comfortable with 100% of the loss. And that's one of the benefits of trading small. I actually like when the market sells off. To me, it's easier to trade. You get to see who the real traders are. Well, I've said it before. We all look like geniuses in bull markets. The market's just going up. So it's easy to trade those. But right now, like, definitely the risk is being priced into the bank stocks. Goldman Sachs has a 76 IV rank. And if we were to look at the chart, look at it. Like, it's getting killed right now over the past, couple weeks. Next level on it for me is right around 282, we'll call it. Let's take a look at Morgan Stanley. Morgan Stanley is down. I don't have any price targets on it currently. Um, Now you can put on some. You don't necessarily have to like get directional with the volatility the way it is in the market right now, especially in the bank stocks. Strangles work in this environment too. You can get, which is basically a neutral trade. Selling some options on either side, meaning like if you don't know what a strangle is, I mean, I'll give you an example. Now, Morgan Stanley does have earnings on April 19th. So I wouldn't hold it to then anyway. I don't know how much vol contraction you'll get with the earnings being there. So I probably would stay away from doing one here. But a neutral trade would be something like, maybe selling the 75, and for me, maybe selling the, I wouldn't I would say the 15 delta here, but the only reason why I would go here is at the 18 delta is because I already see a lot of action there. So you come here and you sell the 95 delta. So basically you're outside of tasty trades, expected move. And you see I got a 70% pop. I took in almost $2, and buying power is just going to eat up about 859. So you took it, well, that's roughly about 20% of the risk. Um, and so with doing so, I think that's a pretty good risk reward. And this is a relatively, well, you can see right here, it says delta. You got a -2 delta. So it's a little bearish, slightly bearish, but this is considered a neutral trade. If I were to move this out some, you can see my deltas change right here. And now my delta is showing like 0.43, which is basically a balanced or neutral strangle. And you can see right here with this green bar, that's me wanting to keep the market in between. So you don't always have to pick a side. If you're watching, news networks, they make it seem as if you only got a choice of what stock to buy, and that's just simply isn't so. Um, let's take a look at, might as well look at Citi. Citi just went negative on the day. Um, its chart looks the same, just like the rest of them. Bank of America, look, it looks worse. But Bank of America has, you can see it starting to turn on the oscillators right here because it is drastically oversold. It has a 21 on the RSI, so it's drastically oversold. It's not a bad candidate, to sell a put in. May get a quick pop. So, but yeah, I would be careful though, doing something like that because I do think we're gonna get a little bit more downside in these. Wells Fargo the same. Wells Fargo is oversold. So there's your most risk. Obviously, is going to be in the banking sector because there's still one bank that right now that's being, FRC has been halted at the time of this video 9 times today. And let's see, they're trying to, from what I've been gathering, listening to the news, you can search it. I'm just on Twitter, just following the stock. They're trying to get someone to step in and possibly um, buy the stock. I mean, buy the company, or they're trying to do something with the stock to keep it from falling. And I don't know if to this point it says J.P. Morgan CEO Jamie Dimon leading talks for new First Republic rescue plan. So they trying to get a rescue um, for FRC, and to this point they have not been successful. So what we could see is if they, let's just plan, let's talk this out. Let's say they don't get someone. Let's pull up the chart and take a look at it. Let's say they don't get someone to buy this stock. First of all, let me say this: stay out of this stock. If you're asking me, I'm staying out. And even though it's drastically oversold, let's say they don't get anyone to buy this stock. Let's go. If they don't, or excuse me, not buy the stock. I'm thinking about a trade. to buy the company or to come in and rescue the company, right? Let's say they don't get anyone to come in and rescue the company. Um, it could just fall. It could just go ahead. They may go into bankruptcy. Who knows what's gonna happen? You don't want to get into. I definitely would not get into this. Like if you wanted to do something like a really small like trade, like maybe I wouldn't maybe buy the shares and maybe look for a quick pop and try to get out. It had to be like something like a day trade, right? But I would not do it. I say stay away from it. Let it do it. There are other candidates you want to trade the banking sector. I just went through the ones, in my opinion, that you should trade. I will stay away from this. But I will also say this: if they don't get a resolution, we could look and see what the ripple effects from this could be. Not getting a resolution in this stock could cause other bank stocks to go lower. So I will be watching that throughout the day. Um, Now they have like Apple's been beasting. So like I was looking at Apple myself, thinking about like a particular trade and how to put something on here. I mean, we literally on the weekly. This is a weekly chart that I got pulled up here. You see Apple getting ready to take out this high, or it just looked like it just did, or it's getting ready to take this high out. So you basically got a what amounts to a bull flag on the weekly in Apple. So I mean, that's a buy signal for me, right? In this market, though, normally that's a buy signal for me. I just don't trust anything in this market, but the setup is there. So if you're just trading on purely pure technicals, the setup is there in Apple. You got a nice, I mean, it's breaking out to the upside. You see it right here. It's clearing this, and you even got, you got a gap up here that it could be going to go fill. Small one right there. But so that's one, and it's not overbought. So we look at the RSI, still got room to run. So that's a, if you're I want to say Apple might be, arguably the best stock in the world, possibly, the best company, the best stock to own, and maybe the best company in the world. Maybe Apple. What's another, Tesla, those type companies, Google, the FANG stocks. And it's going up as I'm doing this video is, breaking out. So you do have an Apple, Tesla is up on the day. Tesla is in like a little range. And what I got on is a Fibonacci retracement from this high back here to this low. And I really think Tesla just may, oscillate back and forth in here. We got earnings on Tesla coming up on April 19th. So what kind of trade could you put on? I don't like putting on stuff with earnings coming up unless, I like to be either under. So like meaning I would try to do some 25 days or less, because if you do something around the earnings, you just won't get you're not going to get the volatility contraction that, because the earnings is there. So it'll probably its volatility will stay bid all the way through earnings. And you want to kind of get paid for the time decay, or the theta decay on the volatility. Of course, time will go by, and so the value of the options will decrease, but you won't get that vol contraction, not being that you're trading during the earnings cycle. So me, best opportunity is in the banks. I do still, let's take a look at IWM. I am still bearish IWM. I'm banking on IWM coming down here, hitting this 168 level down here. But what I think that'll happen is, today you'll have some movement in here. Tomorrow it may stay in here, and then Wednesday we'll get what the Fed is gonna do, and then the Fed will make a move, and then we may get some movement, and then after that decision is probably where I'll look to put on another position. wait on the Fed, make its decision, then come in and put a trade on. So if you are whatever positions you have on right now, I would sit with them. In my opinion, I'm gonna sit with mines. Adding risk right now is basically adding risk to without getting price movement. I like to get price movement before I go to put on some risk. Because don't basically what you'll be doing is having consolidated risk in the same areas of the market. If I pull up Tasty hourly top equities over here, now this is the top equities going through the Tasty platform today, and they update this hourly. And as you can see, we got Google on Tesla. Tesla is generally always near the top, and Apple. We got Coinbase and GLD, which represents gold, and you got FRC. So FRC it's not halted now. You got Meta. So for the most part, this is what we're gonna have. TLT. Now I will be looking at maybe putting something on in the bonds. We'll wait and see what happens on Wednesday. Maybe we can sell some premium in the bonds because you got a 58 IVR, and I like that. And we got looking like the bonds are consolidating right here up at this trend line. You see this trend line going across the top here, and it already came up here, retested, pulled back, and now it looked like it's just going to get into a range until we get that news. So we might get a breakout to the upside, which is what I'm guessing. And so at that point, then I got levels up here, right? So I just want to see it take out this high. Also, I want to let's take a look at, go back to JP Morgan, because this is something that I was telling myself before I started the video. If I see JP Morgan come down here and take this low out, no matter when it takes this low out, I may look to add to my position to look for maybe like some a weekly trade or something a little shorter in time frame, because I do believe it take out this low. The next target for me is 120. Also, I did want to talk about something. Whenever I do videos, I like to come on and do a video and I got something to say, other than just doing videos, just to talk about the things you already seen in the market. On Friday, there was some moving. They Target, Dollar General, and then Dollar Tree were moved out of consumer discretionary and into staples with Walmart. So they're moving around some of the stocks within ETFs. Visa, MasterCard, and PayPal were moved out of technology. So they were in technology, now they're in financials. And you may say, well, big deal. So let's look at financials. Show you why that's a big deal. So you got the XLF, which is the ETF for the financial sector, which sold off with the banks. Now, if you rebalance and then you add something like a Visa, a MasterCard, or a PayPal, right? Let's look at Visa. See, Visa has not sold off like the banks. So when you add Visa in there, you can kind of stem the bleeding in that particular ETF. Let's take a look at MasterCard. See the same thing. It you can see it drifted down a little bit, but you don't have that big downward move. I would still say, for me, this would just be like, some consolidation sideways almost. I would still say this is an uptrend. Let's take a look at PayPal. And you got now PayPal has been on a little downward drift, you can say. But the volatility of the down move is not like when you pull up those if you pull up some of the other stocks, you can see like it's more vertical. And so this is more to the side. So putting these into the financials should make the financials perform a little better over the long term. And if you're one to not really want to do a lot of trading in individual stocks, then you could come into the ETFs and get a little bit more stability and a little bit more. In my opinion, trading ETFs, they're a lot easier to trade. You don't have as much of a risk of ruin or like these big wild moves as you would, because you don't have like a CEO goes to jail, or those type of risk as you would in an individual equity, as you have in you don't have that risk in the ETF. So that I wrote that down, and I wanted to talk about that. So the XLF is in and of itself, like if I'm bearish JP Morgan, I could be bearish JP Morgan and then keep that bearish position. And then if I was someone that I wanted to build a position in financials and take advantage of because they're down, then I could possibly maybe do something in XLF, right? So there are different ways to kind of play the sector. If you want to play all the banks or the majority of them, you could play the XLF, right? Or if you want to pay an individual bank, you can come in and play JP Morgan. Or KRE, which is the regional. Now, this one right here is the regional bank ETF. I'd stay away from this right now, too, as well. And I wouldn't want any parts of this because we don't know what's gonna end up happening with the regional banks. And you got a lot of people moving their money from the small banks, and they're moving them into the big banks. So, and that's what's going on right now. They're trying to reassure everyone that, hey, calm the hysteria, don't, so that people will stop doing that. And anything in here, I wouldn't trade this with someone else's money at this point. I would not want to be long this, and I definitely don't want to short it. They call that getting short in the hole. It's already in the hole. You don't want to get short right here. You might get a pop and run you out of your position. So with that, guys, let's remember, keep your trade small, be comfortable with 100% loss. You get ready to put a trade on. Can I take 100% loss in this? And you be like, yeah, I'd be cool with it. You go ahead and put the trade on, and then you won't get scared out of your position. You can hold them, and then you can sit with them. All right. And be on the lookout. Go ahead and hit the subscribe button. Make sure you do that. And if you want to join, like I said, I show when I do a trade, I send it out in the, I make posts in the community tab. And so anybody that's a member will be able to see the trade when I do it. Like I screenshot my phone and put it out there. You can see my ideas and see what I'm doing. And so, guys, with that, I'm going to be out. Peace.